Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing some red arrows around the world this morning as many indices pull off their all-time highs, but nothing too potent. Yesterday we started off strong and ended weak. Some attribute that to comments from New York Fed President Dudley, others to comments from Carl Icahn. Scott, what did you attribute it to, and how did you handle yesterday?
Well, you have to put it in perspective. First thing, China's off a little bit, Japan's off a little bit, just to see where they just came from. You look at, just say, the FXI. Real quickly, you go to this chart. We talked about the double bottom, the breaking of the downtrend, and then you look where it went from 36 to up to almost 40. So it did close off the high. So I would say, any pullback to maybe 39 or 38.5 could be buyable if it even does that. The EWJs, kind of same type of thing. All it did is rest right here. So I'm not seeing crashes. I'm seeing, bit of a pullback. I'd love to see around 12-ish, 1190. I think some people would love to buy that dip. And like you said, you go to the S&P, you see the run that we've had since November, and then more recently, look where we are. So this is what happened yesterday. We started off a bit stronger, went back through the prior high of 98, and closed down a little bit. So, a red day. I know the bulls are spoiled and we're not used to it, but we'll see what happens next. If the bears want to have any type of power, they want to get us below yesterday's low of 1788 and close us below, and then maybe that leads to a retest of 1781, which is the 8th day, and then this prior breakout of 1775. And I would think that's healthy for both the bulls and the bears if that could actually happen.
Well, turning to today, earnings season continues to wind down, but this is a big week for retail stocks. And this morning we have a bit of a mixed bag from retailers. We have Best Buy down about 5% after reporting disappointing sales, whereas Home Depot up about 3% after beating estimates.
Well, it just shows you that not everything's created equal, but Best Buy is up 400% almost for the year. So I think even if it was good, it might have went lower. So you look here at Best Buy, you'll see it was left for dead to start the year, and I think it's trapped every short out there, and now look where it is. So with that being said, see how it handles this 40-60. See if it goes down to there and holds it to keep this trend intact. If that breaks, just get out of the way. As far as Home Depot is concerned, it's up 3%. Near the old highs. I think overall for the market, the market would have been down probably a little bit more if it wasn't for Home Depot's numbers. So we'll see if it could hold up. If you remember, Walmart came out with numbers that were perceived negative, and then it went from negative to positive. So let's see what they do with HD here.
Right. Well, how about let's check in on tech, because we did see some faulty action in high beta tech stocks yesterday. Despite the fact that we started off strong yesterday, we actually saw Netflix find some sellers right off the open.
Yeah, with high beta tech, or just even the trade yesterday, it changed a little bit. You asked how do I deal with situations like that? You sell some strength, and then you use high-level stops, and that could have worked very well for some guys who had positions they were carrying. And if you look at Netflix, again, I don't think it's the end of the world, but from where it came from, just say down here around 330 to where it opened up, it fell pretty fast. And if you didn't get out of it as a trader, that sometimes hurts. So now the question is, does this small trend hold here? So if you get out of the way, you get to figure it out if it stays there. Right now, what you know is 339.50 is that pivot. So if it were to go below yesterday's low and break below, just say here, you could see some more corrective activity. So at this point, I think a lot of high tech or high beta tech is on wait and see mode if you were looking for momentum.
And yesterday we talked about that Barron's article over the weekend mentioning stocks like LinkedIn and Facebook, knocking LinkedIn and Facebook. And LinkedIn retraced almost 4% yesterday, retested the 8-day. What do you think here?
This is, again, trying to build a new base. It's been weak since earnings. It had a powerful 3-day move, so it was almost like a good timing for that Barron's article, because it was going to probably pull back at some point, but it was more extreme. You look here at LinkedIn, you'll see this is on the earnings move when it broke lower. Here's your bear flag, and this finally is where it caught a bid into prior support. So with that said, 3 up days in a row. It came back down to the moving average. So we got to see what happens here. Does it hold higher, or does it fall apart? So I would treat a lot of these the same way. Watch yesterday's low. Below 221. Maybe it's a short. Above 221, it hangs in there. But ultimately, these stocks need some time, as they've been very choppy, especially these social networking stocks.
Yeah, and Apple gave back more than traders would have liked as well. It broke below the 8-day to retest its 21-day.
Yes, and this one was on the A list. You know, you have an A list, a B list, a C list for potential setups. It went from last week being on the A list, kind of break above 524 and go to 535. It tried Thursday, gave some back Friday, and then yesterday I got stopped out around 523. So you look at the chart here, you got to figure out what's your time frame. You look at this lower base, and where it is right now, no big deal, right? If you bought it in the lower base, you probably used a tier system and made some money. If you bought it after the second quarter earnings, you're okay. If you bought the dip, you're okay. If you bought it here, it's okay. But if you were trading this thing for a potential move to highs above this 539, it needed to get above this and stay above it. It wasn't ready. So that was your stop. So now you see yesterday's low, 518.20. If it goes below it, you know, your next point of reference here is 512.38. So if you're still in it, that's the next spot you have to figure out whether or not you're committed to it or not. You know, hopefully it just comes right back up and hangs in there and needs more time. But at this point, if you're out of the way, it's a little easier to deal with. And
Google looks like it flashed a caution sign after touching its new high as well.
Same thing. You got to know what type of setup you were looking for. I was looking for it was been holding higher, breakout momentum. That breakout momentum trade for now could come back in a session or 5 sessions or not is off the table. Google tried to break out and it couldn't. So it pulled back in. So if you were trading it for a move above 1,041 for a potential nice momentum type trade, you either sold some strength, which a lot of us did, and then you used a high level stop if the trade didn't hold. And if you look here at Google, that's what took place. Okay, this was a nice igniting bar. It was very, very tight. If you had some coming into yesterday and added at 1,041, it did go as high as 1,048, so maybe you sold some strength. But then once it broke back below that area, you had to use high-level stops because you never know what a tail type this could lead to. If it leads to nothing and it goes sideways for another session or two, maybe it tries again. That means the market took it in stride. But if it were to trade below 1,029, then you got to figure out how much back into this overall base does it need time to maneuver.
Right. Google wasn't the only high-level stock showing signs to take caution. We had 3D Systems. Triple D saw a sharp sell-off in the afternoon after making a new high as well.
Well, whenever these things get so extended, you know, some traders look for that trade. So people might have been upset that they pulled off, but I know guys, some momentum guys were trying to find this type of shooting star top in Triple D, and the sector's been unbelievable. Finally flash a signal that it could use a little rest. You look here at Triple D and you'll see, you know, this was the huge base that we've talked about so many times and off the charts, and then it went and extended. Yesterday tried to break out, came back in, and you know what, it might just go sideways above the 8-day and then try again, or it could lead to some type of corrective activity if it breaks below yesterday's low and wants to maybe retest here. But ultimately, you know, this is one of those days where, you know, shorts get squeezed, guys get chased, and then they figure out whether or not you get some corrective activity, and then watch that for the other, you know, names in that group.
Right, and Facebook, one of the other names that Barron's knocked over the weekend in their article, gave back all of its recent gains, slipped 6.5%, broke below the 8 and 21 day. So rough day for Facebook.
Yeah, and no one could foresee an article like that because the 2 sessions before were inside days. That's why yesterday I said, you know what, let's look at 48. 48's to pivot. If you want to be short, that's where you could short. If you have stops and you're long, that's a place to salvage. So you look at the chart before yesterday. So yesterday we came in like, okay, what's going to happen here with Facebook? Is it going to hold higher? Is it going to hold this 48? You know what? It didn't. Look at that move lower. So that was your area to get out of the way using quick feet, which we talk about. So now you look at this pattern here. You do have a head and shoulders top. Left, head, right shoulders. You know, it tried to break once, came back up, never made another lower high. So now here is yesterday's low. If the market's going to weaken, maybe it trades through 45.80, breaks this last point of reference at 45.26, and the measured move comes all the way down to the low 40s. So just be a bit careful. This stock did come from, you know, this cup and handle pattern all the way down sub 30. So this is where it is into this area. You know, it wouldn't be the end of the world and can happen. So just know your time frame.
And Boeing made a new high last week as well, but looks like it's showing signs of exhaustion. What would you be watching for clues about which direction it's going to head?
Funny, people were telling me yesterday, congratulations on one of your stock plays of the year. And I haven't owned it in so long because it met those requirements so early. Look at the move Boeing had. Boeing, this move has been so crazy. You know, it had a really nice channel, which is the reason why I focused on it, which coming into this year, you know, a big multinational like this was, you know, very, very tight. I think my expectations were somewhere into the 90s. Look where it went. You never know where this is going to go, but look at that topping candle, okay? Look at that gap up, sell down. So if you have held it the majority of this time, hopefully you sold a little bit. At this point, it's very extended from the 8 to 21. It's been a monster move. This sometimes is a day to take notice to take some profit, so that's all I'm saying. It's been enormous. Take some off the table. If you want to hold some and you're in it forever, fine. But if you're in more than a tier 1, you know, get down to a tier 2. And if you're looking for a trade as a trader, maybe below 137.77, you know, you see a little bit more downside follow through if you're looking for that cute short, but be careful there.
Okay, let's do some quick hits here. Tesla, you know, it has been weak since earnings. Yesterday had a sharp sell-off, dropped another more than 10% to retest its 200-day. I mean, now at the levels that it's at, will you be looking for a potential bounce?
I definitely will be looking today. You know, big boy stocks, you need big boy rules, and this trend broke almost before earnings, and then you had another chance to get out on earnings. So you look here, look at the chart, look at the trend. Strong trend coming all the way up. This is when it changed. This is when it went pre-earnings. So even if you wanted to get out and not being on earnings, you saved yourself a big gap down. Then it failed right here at this pivot, and now look where it is. So today it's down $4 or $5. So see if it reverses. If it's down, just say at 115 comes off that low, be a buy versus that low. If it broke 115, get out of the way and see if it goes all the way to 107. But if it builds and then crosses back above 119.61, maybe you caught yourself some type of tradable day-and-a-half move to retrace some of this big down move. So I will look there for opportunity today.
And what are your thoughts on Twitter? Had more downside follow-through yesterday, retraced another 6.5%.
Now, this type of stock, or even it's so high profile, you just take a level versus a level. Small trades. It usually takes 4 to 6 weeks for a stock after an IPO just to even give you a nice pattern where you could have some kind of calculated method. So real quickly, look here at Twitter. You know, I did trade it on this day when you had this little tradable move above the prior low. That was your pivot right there. Okay, and then you had a nice little move. Okay, from there it's retraced. You can say there's a little floor, right? Here's your floor, right around 39.60 to 40 and change. If it were to break below, you know, who knows? And breaks this, there's nobody knows where it could go. Don't have any kind of opinions. But so ultimately, this to me is just telling me it needs time. All you could do now today is maybe use 40.85 as your pivot to trade around. Maybe it tries to hold here for a double bottom, but I think just micro trades there.
And over in retail, what about JCPenney? You know, I have been perking up recently, but did have a sharp pullback yesterday. Do you think the damage was contained?
Yeah, from 720 to 940, or even lower than that to higher than that, that was a nice move. So day one to the downside. Earnings, I think, are tomorrow. So some people might not want to take it into earnings. So it was a good bounce, and now you have to be really committed to hold through earnings.
Well, and over in the banks, Bank of America also subject to the pullback in the afternoon. What are the levels that you're watching here?
Well, let's just go right to that chart because it's been a great move for a week and a half. Look at this move from sub 14 all the way up to above 15. So a little bit of a breakout failure. To me, I think it's fine, you know, but again, a little too far, too fast. If it does trade below 14, what is that, 86, you know, here is the 8-day 1467. That would be a spot that I would love to see so I could actually buy more because I did sell a lot into that strength and I don't own enough if it's going to go higher.
All right, so what is your strategy heading into the trading session today?
Just want to see what kind of power the bears have. Right now we're dancing around yesterday's lows. Could we extend lower to hit the 8-day? If we do, that's when I'll probably cover the majority of my spider short. I already covered a little bit of my spiders because I came in net short pre-morning call, and then I'll see if there's more downside here. If all of a sudden we get back above yesterday's low and start to grind higher and the banks hold in there and high beta doesn't fall apart, you know what? Yesterday didn't mean much. So today, or the next two sessions, are where you measure on whether that day to take notice was just a day in the life or leads to something a bit more corrective type.
Gotcha. All right. Well, that's your morning call for this Tuesday. Happy trading. Have a great day.